Hello guys. We're going to look at the second chart. I hope we'll sharpen that side. So the first one that we looked at was Nasdaq. So now I want us to look at, to have like a top-down analysis of what USDZAR, which is the dollar against our rand. So let's get started. So you know what to do. If you're new here and you like this style of trading, and you've been watching the videos that I've been putting on the YouTube, and you feel like you like the way I do the top breakdown of the markets, and you want to learn more of that, you can just leave a comment. Then maybe you can join in the next mentorship group. So but for now, let's get started. So as always, and if you haven't subscribed, do so please. So as always, we start with the highest time frame, which is our monthly. So this is our monthly chart. It looks something like this. So let's remove all these drawings so that we can start afresh, so that you understand why I put them right where I put them. So let's get started. So our monthly chart looks like this. Currently the price is inside a very strong, it's just testing what a very strong starts from this. You can see that a very strong area of resistance on monthly. So meaning a downward move is very imminent. We're most likely gonna see a downward move. For as long as the price doesn't give us a new high, I doubt that will happen, because it means it has to push the price towards the 20 rands to $1, and I don't see that happening, but it's possible, right? So currently on monthly, this is what you have. So this area of resistance, even when we were there, I think it was the all-time high. So now we are testing it, and it was look like very fresh. So it is a very strong one, because it's the one that initiated this nice movement to the downside, and broke areas of support, and broke the trend line as well that you had during that time. So it's a very strong area of resistance. So because currently this time frame is sort of sort of bullish, you can put your trend line there, or you can put it there. It doesn't matter, for as long as you are joining the lows, and this is your nearest area of support, you are inside the resistance. So that's your resistance, and there's your support. So because now the price is testing the resistance, like I said, what is most likely to, what is possible from this high on, it's a sort of a rejection, and then a pullback like that. So that's what you're most likely gonna see in the next coming coming months or so, because this is a monthly chart. It might not happen this week, but on a longer run, we have hit a very strong area of resistance. So meaning, if you've been buying, you need to be, start, locking in your profits, exiting some of your trades, because now you can't open more buy trades inside an area where they sell orders. So those sell orders are gonna create a supply. So that supply, that liquidity is what is going to drive the price, most likely going to drive the price to the downside. So that's all that you have on the monthly chart. So that's why I'm saying the way I teach, the way I do the breakdown, it doesn't change whether I'm looking at those funny indices on Deriv, or I'm doing Nasdaq, or I'm doing currencies. It doesn't change. So what I teach in the mentorship is something that you can apply on each and every chart, whatever chart that you like, whatever instrument that you like, you can apply it there, and it will still work. All right. So this is what we have on weekly. So let's bring a horizontal line, so that we know that on monthly we are inside a monthly zone, right? So on weekly, this is where the weekly weekly resistance starts. So basically I used this point here. Okay, let's just bring that. I used this point. So from this is like a tiny market pause. So that's the nearest resistance we have, and it is inside the weekly one. The monthly one should be broken. We are still around this. Remember, this whole thing, it's a monthly area of resistance. So that's why we are saying the price is most likely gonna struggle to break to the other side. It's most likely gonna push down. You can say I'm gonna target these areas here as my next stop sign. They're around 17.2. That's where the price can push down towards. So in terms of a trend line, the weekly trend line currently, it stays there, and your zones are somewhere around there. So basically you're inside the weekly the monthly area of resistance. Should you get reasons to go short, you can do so, and then this will be what you'll be targeting. somewhere around there. Because as much as we are coming from, we'll be saying we are coming from a monthly area of resistance. But if I'm not executing the entire monthly zone, if I'm executing somewhere else, I cannot ignore the structures on that time frame where I'm executing. So I cannot just go with what I'm coming from a monthly resistance, the prices to go down like this. Yes, it's possible, but at the same time, it can still do this before, and it can still reach there, but it might not go there immediately, which is why you shouldn't ignore the structures on the time frame where you executed. So those are the structures that you're going to use to take to set up what your take profit. So that's what all that you have here. We still have the same approach. We're still leaning towards the sellers. From, we say the monthly one, I think it starts from there, but the weekly starts there. So any moment we can get a pullback, and then we're gonna target structures around there because the weekly trend line is not yet taken out. So I don't want to waste time on this one. I don't want to waste the time. So this is the daily structure that we have, right? So when the price touched that monthly area of resistance, it started forming the rejection candlesticks, and then it broke the range of that to the downside, and then that's when it took off to the downside. But they couldn't maintain the momentum. The sellers, they couldn't maintain the momentum. They only went until, you see this here, until the next structure, the next support, or the next bullish trend line. In this case, they hit what? They hit the support. Though that's why when you're trading, you are just gonna target the next structure on your time frame. We don't care. You shouldn't just say, I know we are coming from the monthly resistance, so this price might go down, like must do that. It can do that, but it doesn't have to do it now. Remember, it doesn't have to do it now. It can do it in the next coming weeks or so. We know where we are. Yes, it can turn, but it doesn't have to happen now. Which means when you get your trades to downside, target your next structure. In this case, you're targeting this because you don't know what's going to happen there. If it's broken, then you can trade the pullbacks to the downside. So because you don't know what's going to happen at the zone, that's why I'm saying you must never predict that the key structure is going to be taken out. So this is what we have currently on daily. Daily is still very much to the upside, but buying is not something that I would advise you to do because of where we are with relation to the higher time frame structure. So this is where you can maybe place your daily bullish trend line and say, because the daily is still bullish, the trend line is there, the nearest support is around there, but we are not gonna buy. We just want to see it, so that when the price comes back and it breaks it, we can say the structure has changed, then we can start selling to the downside. So we just want to keep these nearest structures visible on our chart, so that we know when the structure has changed, to say that this is the confirmation that I wanted, to say that the price is reacting from this resistance. So because this is the confirmation, now I can start selling. So that's why you need to make sure that you always target the nearest one. So let's see if we can locate the nearest support on this time frame. Remember, this horizontal line marks where your nearest weekly resistance starts. So you can see that even on daily, the structure is going to be the same. It's going to be around the same. So that's your nearest daily resistance. So currently you are here. Maybe the price might push there before taking, dropping like that. But anything is possible from this moment. The price can drop any minute from now. So that's all that we need. So what is important is for you to know that we are still bullish, but you could buy when you're still moving up. But once you hit those higher time frame structures, buying now is something that you have to stop. You are exiting your trades. You leave one trade running. Maybe you just trading the stop loss, trailing the stop loss, trailing it just like that until the day the price is going to reverse and then takes out your stop loss. Then it means the structure is no longer bullish. It just changed. Then you can start selling to the downside. So that's all that we have on this time frame. So let's do what we, because remember, it's a top-down analysis. So that's the approach that you should use. You cannot just say, I execute M15. So I just open my chart, go on M15. Maybe I see, like a bullish pin bar, then I start buying. No, but you don't know where you are. You need to first locate yourself, where you're trying to buy. What if you are inside, you are hitting a resistance? You see, that's not high on. So that's why you need to just check other structures, other time frames, so that when you come back or come down, when you reach your execution time frame, at least you know how the other time frames look like, so that you can decide if what you are trying to do agrees with what you saw on the higher time frames. In that way, you won't find yourself on the wrong side of the market, right? So now this is what we have on our H4. On our H4, remember, this is when the price came to this area when we said this was our daily area of support. It went there and then it formed all those pin bars and then it took off. It was not a good thing to do, but you can see it gave you those nice pin bars and then it took off, right? Currently, what we are having there, what do we call it? That is what we call, we know we are inside higher time frame resistance, right? On this time frame, you have bearish or rejection. That's another sign that you need because you are trying to search for trades to the downside. And the red candlestick, it did what? It's a bearish engulfing because it engulfed that last pin bar to the upside. So all these things that you are seeing here, they are saying what? The bears. They're saying the bears. So that's why I'm saying the price currently is most likely gonna, it has higher chances of coming to at least that on this time frame. But on the higher time frames, they're saying if that doesn't happen, it can still push up slightly. Remember where you have your weekly resistance, daily resistance located. So if it doesn't drop now, because remember I said this has got higher chances of dropping towards 17.2, but it doesn't have to happen now. It does not have to happen now, which is why it can still push up, maybe reach 18.1, where it's gonna touch that weekly resistance, that daily resistance, and then from there, and then it starts dropping. So, but if I'm executing H4, I can see that on H4, there's some small confirmation that I have here that maybe you can use it to execute and target what? This as your TP, right? But remember, you need to have a stop loss in place. Just push it there above your high, but you need to it will depend on how the market opens, or if you're still not yet convinced, maybe getting even more discount by pushing up towards that resistance on weekly and daily. That maybe will give you more odds, right? But currently, going long is not something that it's I would advise you to do. So if the price reaches that area of support where we're saying you can maybe take profit, we're not gonna say take profit and then buy, no, because yes, we can take profit and then the price goes up, but you're not gonna buy. So should the price come back and do this, then you can say bullish trend line removed, support removed. Now the structure is turning to the downside. Then maybe should you get a pullback to the nearest area of resistance, you can sell that, right? Because now on this time frame, you've got even more confirmation to see what the sellers are kicking in. That's why you even broke the bullish structures. So when all of that is broken, then that's when you can start planning to even get more sell trades. But currently, if you decide to enter, you're not gonna enter and put your TP here because this guy is not yet broken. This guy is not yet broken, and I said we don't predict that such structures are going to be broken. That's why when you are taking your trades, you are only gonna target them. You're going to use them as your take profit. You're not gonna, look beyond them. You're not gonna pretend like they're not there because you're going to be disappointed. If you do that, yes, sometimes the price is gonna break them, but the price can still do this, and you're not gonna forgive yourself. You're going to be very frustrated. And say that I knew this is support. Why didn't I exit? And only you can answer that question. So to avoid such scenarios, all you have to do is to say that once a key structure is hit, I'm out. Once a key structure is hit, I'm out. In that way, you will see that most of the time you won't have issues. So that's all that you can say we are expecting from this one. So those structures that we're seeing there at the top, they can push the price towards this, or the price can still push up slightly towards that weekly and daily resistance before coming back to the same, possibly the same area there. So that's all that you can expect from the USDZAR if you're trading it. So H1, I don't like this one. It's too small for me. So now if you're trading H1, it means this is your nearest support, and you don't have any reasons to go in here. Yes, you did get the bearish engulfing. Maybe if this can do that, and then maybe you can get that towards, remember, the H4 support. So that's how you can do it also. So one thing that you need to keep in mind on USDZAR is that what currently the best thing to do, or the direction that is going to higher out from where we are, is to the downside because of where we are, the location. You're located inside very high structures, resistance areas on higher time frames. So that's why we're saying the thing that is most likely going to happen is the price pushing to the downside. So that's all that you can expect on USDZAR. So you see, this approach is the same approach that I showed you even on different charts. So that's why I'm saying what I teach in my mentorship, it's not something that's going to confuse you. I try and make sure that everything is as simple as possible. So if you're interested, you can just leave a comment. Then you can join in the group of October, so that you are also able to say, whenever I open any chart, I can open it with confidence and do a thorough top-down analysis and know where to search for trades, what type of trades. So that's what I want. That is what I want. So for now, this is all that I wanted to share with you guys. That's all that you can expect from USDZAR. And if this is something that you trade, you can also watch it and make sure that if you get reasons to enter, you can take those trades. But for now, that's all that I wanted to share with you guys. And if you haven't subscribed, make sure that you do so. And if this is the first video that you are seeing from this channel, make sure that you check out even the other videos, because the content that I share, guys, it's gonna help you a lot. It's gonna help you a lot. You need to have confidence when you open your chart. You need to make a decision and even have reasons why you made that decision. Don't just say I bought because I saw a bullish candlestick. No, you need more than that. That's what I teach. All right, guys, I'll see you in the next video. Thank you.